Are you hearing rumors about the Fed cutting the rate? What does that mean for you? What do the experts have to say? This is Dia Irby with this week's market update, here to explore the Federal Reserve's possible actions and the impact on the housing market. Now that it's September, all eyes are on the Federal Reserve, the Fed. The overwhelming expectation is that they'll cut the federal funds rate at their upcoming meeting, driven primarily by recent signs that inflation is cooling and the job market is slowing down. Mark Zandi, chief economist at Moody's Analytics, said, and I quote, "They're ready to cut just as long as we don't get an inflation surprise between now and September, which we won't," end quote. And we didn't. What does this mean for the housing market? And more importantly, for you as a potential home buyer or seller? Why does a federal funds rate cut matter? The federal funds rate is one of the key factors that influences mortgage rates. Things like the economy, geopolitical uncertainty, and more also have an impact. When the Fed cuts the federal funds rate, it signals what's happening in the broader economy, and mortgage rates tend to respond. While a single rate cut might not lead to a dramatic drop in mortgage rates, it could contribute to gradual decline that's already happening. As Mike Fratantoni, chief economist at the Mortgage Bankers Association, MBA, points out, and I quote, "Once the Fed kicks off a rate-cutting cycle, we do expect that mortgage rates will move somewhat lower," end quote. And any upcoming federal funds rate cut likely won't be a one-time event. Lawrence Yun, chief economist at the National Association of Realtors, NAR, says, and I quote, "Generally, the rate-cutting cycle is not one and done. 6 to 8 rounds of rate cuts all through 2025 look likely," end quote. What is the projected impact on mortgage rates? Here's what experts in the industry project for mortgage rates through 2025. One contributing factor to this ongoing gradual decline is the anticipated cuts from the Fed. This graph shows the latest forecast from Fannie Mae, MBA, NAR, and Wells Fargo. This is based on a 30-year fixed rate as of 8/23/2024. Right now, it looks like it's between 6.5 and 7. So with recent improvements in inflation and signs of a cooling job market, a federal funds rate cut is likely to lead to a moderate decline in mortgage rates. That's shown in the dotted lines. Here are 2 big reasons why that's good news for both buyers and sellers. One, it helps alleviate the locked-in effect for current homeowners. Lower mortgage rates could help ease the locked-in effect. That's where people feel stuck within their current home because today's rates are higher than what they locked in when they bought their current house. And if your current rate is under 3 and you're hesitant to buy again with a rate over 6%, if the fear of losing your low-rate mortgage and facing higher costs has kept you out of the market, a slight reduction in rates could make selling a bit more attractive again. However, this isn't expected to bring a flood of sellers to the market, as many homeowners may still be cautious about giving up their existing mortgage rate. Number 2, it should boost buyer activity. For potential home buyers, any drop in mortgage rates will provide a more inviting housing market. Lower mortgage rates can reduce the overall cost of home ownership, making it more feasible for you if you've been waiting to make a move. What should you do? While a federal funds rate cut is not expected to lead to drastically lower mortgage rates, it will likely contribute to the gradual decrease that's already happening. And while the anticipated rate cut represents a positive shift for the future of the housing market, it's important to consider your options right now. Jacob Chanel, senior economist at LendingTree, sums it up well, and I quote, "Timing the market is basically impossible. If you're always waiting for the perfect market conditions, you're going to be waiting forever. Buy now, only if it's a good idea for you," end quote. Here's the bottom line. The expected federal funds rate cut, driven by improving inflation and slower job growth, is likely to have a positive, though gradual, impact on mortgage rates. That could help unlock opportunities for you. When you're ready, let's connect. That way, you'll be prepared to take action when the time is right for you. Remember, I'm here to answer your questions and guide you on your real estate journey. Until next time, stay informed and stay positive. This is Dia Irby, your favorite realtor, by your side all the way. Bye now.